Good evening, everyone. We're going to start shortly. All right. So, good evening once again. This is Ajit Mishra from Religare Broking, and welcome you all in the weekly webinar of Week Ahead with Religare Technicals. Some of you who are regularly, participate in this webinar know the format. For those who are joining us for the first time, in this webinar, the idea behind this webinar is to share first a brief about how the markets performed during the passing week. But the focus area is what we are anticipating in the coming week, especially for the Nifty and the banking index, followed by some of these stock charts wherein we see the potential for both positive or negative side, depending upon the market conditions, basically. We end this presentation with a quick poll just to get the feedback, and then we approach the session with a Q&A. So anything related to the webinar, any particular sector which we may have missed out during the presentation, you can ask. No stock specific question, considering that the other people, like those who are participating, might not having those stock in their portfolios. So it's better that we talk about sector in general so that it benefits the larger audience. So let's start with a quick disclaimer. As we just shared that the idea is to share the insight. It's not a trading or investment recommendation. So before making any decision based on the information presented, please check with your financial advisor. All right. So second consecutive week for both Nifty and Sensex to end on a flat note. But it's not that simple. Means it was a volatile week. Nifty slipped towards 19,300 mark, 330 mark, before ending on a flat note to 19,653. So amid this volatility, one thing which was there is that select index majors performed really well, but largely you would see that it's more of like a consolidation phase that we are currently into. So apart from the benchmark, on the sectoral front, mostly sectors on the right side of this table, as you see that mostly were on the negative side. So energy, pharma, metal, auto, banking, among the key sectors, 5 were on the negative side. The 3 which managed to end in positive was reality, IT, and media. So, but it's not the right reflection, to be honest, when it comes to the overall market performance, because some of these stocks from these, underperforming basket, like energy, pharma, metal, also did well during the week on the stock specific front. So we'll talk about that in detail as this during the presentation itself. So this was the sectoral move for the week. Now coming to the top 5 gainers from the Nifty 50 basket, you can see that name of Bajaj Twins, which managed to post decent gains over 4% for Bajaj Finance, and FinServ around 6%. Titan, Infosys, and Adani Enterprises also were among the top gainers, top 5 gainers during the week. On the negative side, a couple of names for the energy basket: ONGC, NTPC, then Hindalco from the metal space. Axis Bank means surprisingly one of the best performing names from the private banking space, ended with 3% kind of a cut. And lastly on the list, Dr. Reddy's. So this is how the week progressed. Means the index ended on a flat note. On stock specific, sector specific, we had a move across segment. Now, what we are anticipating for the coming week. This is the daily graph of Nifty index, and just to refresh what we've shared last time, that this zone, this fainted yellow line which you can see, Nifty couldn't surpass that level last week and ended on a flat note. despite the multiple attempts. So that shows that there's a possibility of further decline, and Nifty might inch toward 19,200, 19,400 zone before making an attempt of further up move. So on a similar line, we saw that move. Nifty slipped below that first area of support, 19,400, 450. On the closing basis, though, it managed to inch higher. 19,200, we managed to defend this green line, which coincides with this, trend line support. But upside remained capped. Means in the last 3 trading session, though we managed to recover, but again on Friday, means in today's session, we again retested this yellow line, the 20 EMA. So what is going on? So it's a normal breather, we feel, and why we are saying so, that this entire move, 19,200 to 20,200, this 1,000-point move, we have almost retraced the entire move. It was hardly any 100 points which was left to retest the bottom. So it's natural that we see a bit of a breather, consolidation, some recovery respite, in the index, or maybe a stock, in case whatever the underlying that we are trading in. So that is what we are seeing right now. If we manage to surpass this level, means if we manage to hold this 20 EMA, we manage to cross and hold above this, then 19,800, this area, closer to this area, and 20,000, means this recovery can strengthen further, provided we hold 20 EMA, which is currently around 19,660, 19,670, if I'm not wrong. So this is important, that earlier also we had made attempts to reclaim this mark, but we couldn't sustain. So once we cross this mark, then 19,800 to 20,000 is the best case scenario for this recovery to extend. On downside, the same range that we've discussed earlier, 19,450 to 250. Why 250? Earlier 200, because this moving average has shifted marginally higher. So now this zone, 200-point kind of a zone, 19,250 to 450, will act as a strong support in case if the profit taking resumes. So as of now, indications are not very clear that on which direction we are going to see the index moving. But since we have not crossed the short-term average, we should maintain the negative bias until we decisively reclaim that. And the participation should also improve. It's certainly not the way we are seeing, like select IT majors helping the index to inch higher. Then we have some of the other heavyweight from the other sectors, but not the broader participation. So this is something which we need for the Nifty to reclaim 20 EMA and inch further upward. Meanwhile, stock specific, yes, we are getting opportunities on both positive or negative side, so one should plan accordingly. Now coming to the critical factor, which is going to be one of the key important factor to determine that on which direction we are going to see the market approaching next week. That is banking index. So this is the banking index daily graph. Last week we were somewhat around this trend line support, and we were anticipating that it might respect this, but finally we breached that trend line support during the week. We're trying to reclaim that, but the last 2 days of move, the underperformance, yesterday also and today also, in both the sessions we have underperformed the benchmark. So it's not a very encouraging sign. So just to give the idea that today it was ICICI Bank and IndusInd Bank which inched higher, but HDFC, Axis, they ended almost in a flat note. So amid this mixed trend within the private banking majors, I doubt that there will be any meaningful recovery in the market. But having said that, in case if banking manages to cross 44,700 mark decisively, which is roughly around 300, 400 points away from the current level, that coincides with this 20 EMA on the daily chart for banking index, then there could be a possibility that the recovery that we were discussing about index testing 20,000 mark would be higher. But without banking, I doubt that the move is going to be sustainable. So this underperformance of the banking is one factor why it's prudent to maintain few shorts also in the market until we see the situation improve from the banking side as well. So once we cross 44,700, then 45,300 is the next area of resistance. Downside 43,900 to 43,300 will continue to act as a support area. That last time we also respected that mark. So this time also we are anticipating that 43,900 is going to be the first area of support for the banking index. Meanwhile, as we just shared that private banking majors are not aligned, and the top performers earlier like Axis, ICICI, they are also on the back foot. In fact, Axis is among the top losers during the week. So keeping that in mind, one should not be aggressive in long trades in the banking space, at least for now. PSUs, they are doing well. Every now and then we see very strong move in some of these PSU majors. Sorry. But the reaction is equally severe, means we see the profit taking and decline equally sharp within the PSU space. So keeping that in mind, we feel that it's prudent to let's wait and watch how the banking index is going to pan out, and then plan the strategy, like how we're going to approach from the short-term trading perspective. Meanwhile, restrict your positions. Just a second, guys. I'll just take a sip of water and I'll be back. Sorry, yeah. And so this is about banking index. Now, stock specific, where one should keep a close eye on. This is the first name on the list, Bajaj Finance. So Bajaj Finance, though we all know that it's among the top gainer within the Nifty 50 basket, but that is not the reason that why we have included in that list. The reason is that 2 years of consolidation that we were seeing in Bajaj Finance has finally ended this week. So you can see that this entire period, 7700, 7800 was the upper band for this stock. It tried multiple occasions to cross and sustain, but it couldn't. Finally, we have this breakout in Bajaj Finance. So understand that people might have this notion that why we are selecting a stock which is already at the record highs, or means yes, fresh breakout when the markets are not very strong. So that's the reason basically why we are selecting this. It means that this stock has some inherent strength, the reason for which we are seeing this buying interest. And usually the stocks which do well during the market correction turned out to be the top performer in the next leg of the up move. So Bajaj Finance, after 2 years of consolidation breakout, usually those who know or track Bajaj Finance understand the kind of move that is usually witnessed post such breakouts. So this is on a similar line we are anticipating. The range was closer to around 7750 to 5750, roughly around 2000 points on the higher side is the open area that we have for Bajaj Finance as the upside target. So this is one stock that one should keep on radar for long trades. Next on the list, granules. Pharma as a sector is one of the sector which is holding well. Granules, again, like after a very prolonged consolidation, is finally making an attempt to cross. It's almost crossed basically this trendline resistance on the weekly chart. and inching gradually higher, strong volumes, everything looks positive. In fact, if I'm not wrong, we have shared this about granules, earlier also during the webinars, in our past webinars. But this time around, it's a clear confirmation that we have. There could be a bit of a consolidation or profit taking every now and then. But the way we are seeing the price action along with the volumes, it seems that this move should continue. So one can look at granules also for the long trades. Lastly on the list, Voltas. So Voltas, this consolidation range, roughly around 900 to 740. It spent decent time over a year and a half, witnessed a breakout, but couldn't sustain, marginal retracement to the short-term averages, a fresh buying pivot formation, and then it's again making an attempt of recovery. So, when the markets are, bit wobbly, means we are not sure of the direction. Risk management is something which is very important, especially if you are initiating long trades because you are going against the market trend. So Voltas is one such name wherein we are saying we are playing recovery. It's not that it's trading at the record highs. So we have both kind of stocks. One which is trading at the record high, other which is set for a reversal. So that's kind of a balance in case if the market corrects further. There will not be much pressure in Voltas even if the markets correct further. Considering that it's already under pressure, now it's a reversal time. It might spend a week or two more during the consolidation, but overall possibility of stock inching higher seems high in comparison to again retesting the previous lows. So these are the top three names which we like. So just to sum it up, Nifty, until we reclaim 20 EMA, avoid aggressive longs, means at least in the index. Stock specific, yes, we are seeing great opportunities across the board. So one can continue with the stock specific approach and do maintain few shorts also. That is what we are continuously recommending to our clients. At the same time, the underperformance of the banking is something which is, causing this entire caution to us. So until we break 44,700 mark in the banking, I doubt that there will be any meaningful move in the market and Nifty could make a sustainable up move as well. So amid this confusion over the next directional move, it's prudent that one should stay stock specific. We've talked about Bajaj Finance, we talked about Granules, Voltas, which are some of the names which are positive structures which one can look at from positional perspective. So with this, the webinar ends. Now we'll do a quick poll. So please fill in your feedback and then you can start posting your question using that Q&A tab. See, to ask any question, you can use that Q&A button which is there on your screen. Raise hand option is not recommended. Please write your question using that Q&A tab if you're done with the feedback. Please quickly fill this feedback so that we can start with the Q&A. All right. So let's start with Q&A now. And as we have requested at the beginning of the webinar itself, please avoid stock-specific question. I'm going to skip those questions which are stock-specific in nature, and we'll address largely the sector-specific or anything which is generic in nature, which covers a subsector or something like that, but no individual stock-specific queries, please. The first query from Mr. Avik Gwangli on FMCG sector. So yes, FMCG is also now showing sign of stability. If we talk about Nifty FMCG index, among these stocks, within this sector, Mr. Kamli, what we are seeing is stock like Colgate, Dabur, and Marico is now witnessing pressure after decent performance. These are a couple of names which are holding strong. Then we have stock like ITC, HUL, which are trading at a critical juncture. Means there's a possibility that they could move either side. So there's no decisive sign as such, when it comes to the entire sector. So that's why, we have been kept on mentioning that maintain stock-specific approach, and within the sector, select the best. So of late, last week, we've talked about L&T Finance from the NBFC basket. This time, we've talked about Bajaj Finance. So we are choosing the top performing names. It's not that the top performing name for the week, but for the following week also. Means wherein we are seeing relatively higher strength. So look for names like Colgate, Dabur. Yeah, these are top two names which I feel that should be on your radar from the FMCG space, at least for a time being. Okay, next question from Mr. AR on white goods. So Mr. AR, we have anyways covered Voltas in that in the category. Plus now we have the other players like which are into FMCG category also, like Havells, Polycab. They are also doing well. Havells, I feel, is comparatively better structure. Polycab is also trading at the record highs, but these are some of the names which are positively aligned and where we see potential to do well from the short to medium term perspective. All right. Thank you, Mr. Subramaniam, for the feedback on webinar. And what about IT and auto and power sector? Okay, so we'll start with IT. IT, in fact, I would say was among the best sectors during the week and was among the top gainers also. IT majors, Infosys and TCS, they played a critical role in the recovery during the week. Means in the last 2-3 trading sessions, they managed to maintain the positive stance. There were volatility in between, but the stance was positive. Then we have some of the mid-cap IT names also, like Birlasoft, Persistent, which are doing well. So, but at the same time, Wipro, TechM and LTIM, some of these names are reeling under pressure. So it's not the sector, basically. I'm again trying to re-emphasize on what we've discussed during the webinar. Within the sector, look at the stocks which are not falling much while the markets are declining and while the sector is declining, and they are witnessing quick recovery, or in fact, they are not participating or inching higher when the market corrects. So in that category, like as of now, TCS, Infosys, from the short-term trading perspective, HCL Tech, Birlasoft, these are top names which one can look at in the IT basket. Auto also, we have a similar move wherein largely either it's sideways or witnessing profit taking. So except a couple of names like Escorts, Bajaj Auto, we are still seeing some traction, but rest of the names like Maruti, M&M, Eicher, they are witnessing some consolidation and profit taking now. So auto, I feel that for a time being, one should avoid. Let this sector stabilize, because after a very strong up move, it's normal to see some consolidation, and that is what we are seeing in the auto space. Within the power space also, we are seeing a similar structure, because the power and related sectors, they have done exceptionally well, and now we are seeing a bit of a consolidation. So power also I would recommend to avoid, at least for a time being, in case if the view is short term. Okay, no stock specific question. Anjana ji, Shlok ji, that I have mentioned during the webinar. I hope, Mr. Tomar, that you have got the answer on TCS. Means they're the top two names, Infosys, TCS. So yes, you can continue with your position based on what the indication that we have. How I can't get it, Mr. Chandresh Patil have this question. How to chart review show means? Can you please rephrase your question so it will be easier for us to understand? Okay, next question from Mr. Shalok Agarwal on steel sector. So metals, yes, metals are still holding strong. It's normal that after a strong move we see some consolidation, and that is what we are seeing in the metal space. But largely, it's not witnessing any major damage during this corrective phase. So yes, every now and then we see stocks like Tata Steel, Hindalco up and down. Exclude and not look VDL into this list as of now, considering that it's more of a news driven due to some reason or the other, it's in news. So it's extremely volatile. Rest of the counters are performing in line or holding strong. But yes, as of now, indications are not in the favor that there is a clear cut indication of positivity. So for a time being, it's prudent that one should avoid metal counters until we see some sign of buying interest emerging at the lower levels. All right. Okay, next question again from Mr. Shlok on aerospace and defense industry. So now we are seeing a bit of a breather in defense related stock. In fact, in the past webinar, if you'll see the recordings, we were very vocal about HAL, BEL, Astra Micro, BDL, all these names. But now we are seeing that it's obvious that after such a strong phenomenal surge, it's prudent to witness some consolidation, and that is what we are seeing. So short term, I'm not anticipating. In fact, now it will be more of a wait and watch whether the euphoria that we saw in the stock prices is justified with the numbers. So that is going to be critical during the earnings season. So for a time being now, defense, railways, wherein we had phenomenal surge in the last recent weeks or months. Maintain some caution while you are touching those names. Plus, additional to this, the broader indices, mid cap and small cap, they are still holding strong, still holding up the short-term averages, which is opposite to what we are seeing in the index. Means Nifty is resisting 20 EMA and they are holding 20 EMA. The significance of holding 20 EMA shows the kind of strength. Means the buyers are completely under control. They are not in a position, not agreeing to lose their stance, and every dip they are looking for buying opportunity. So still, after this strong outperformance, we feel that one should be selective in the broader indices also, and very strict with your stop losses. So we have talked about metal sectors in detail. So I hope it answered your query, Mr. AK. And housing finance stock, Mr. Rajshekhar have asked. So yes, housing finance is doing well. Again, means mixed trend. Like Kenfin, LIC, they are holding strong. Intervals now we are seeing correction, profit taking. I feel that Canfin and LIC are comparatively better structure if somebody is looking for long bets. Mr. Santoshan, we don't have any stock as such from the e-commerce space which is listed except Infibeam or which is having a pure play e-commerce play. Some of the other are like stated and they have their channels, e-commerce channel, but I feel that it's something which is separate to this listed domain. It's not relevant to the forum that we are in. Okay, next again on real estate. The defense we have already discussed, Mr. Subramaniam, and real estate, yes. I feel that the next sector which could outperform in the next week could be real estate. This week also it did well. I expect this outperformance is positive tone to continue in the next week also. So within this space, DLF, Godrej Property, Prestige, Shobha. Yeah, these are some of the names which look upbeat to us. Okay. Okay, next question on QSR sector. So yes, Mr. Deepak, QSR means we are doing well selectively. If you talk about some of these names, whether it's a restaurant brand or this Zomato and all. So they have done pretty well. Means the recovery is quite steady, and we are seeing sustained recovery also. So I feel that this move should sustain. Earlier also we had a recovery means, but they are very volatile. In the past instances. So this time around, in case if they manage to hold this positivity, then it could be on market radar. But as of now, yes, in case if you're holding positions, you can continue to hold the selective names. But aggressive position is something that one should avoid, considering the kind of move that we have already seen from the lows in these names. Okay, Mr. Babsito Mascarenhas has the question: is it advisable to trade the Nifty derivative options next week? Means see anything means into the market in case if you're not aware of, if you have any doubt, please check with your financial advisor. Not on anybody's recommendation that you should do that until you understand the product. So be it derivative, be it anything else, please understand that product, and then you can, of course, use the same. Sugar sector, are we seeing any positivity? This is what Mr. Benjamin Robert have asked, as festive season is round the corner. So usually yes, but it's something which is a cliche. Means everybody knows this, that that festival season is around the corner, so we might see positivity in the sugar stock. But they are anyways under limelight due to ethanol theme. So I feel that it's not going to be that easy. Plus, we have other challenges related to regulatory part, that beyond a price, they can't, raise the price. So all these factors somehow keep the upside in check. But this ethanol theme has changed the entire landscape for sugar companies. So on the basis of that, in case if somebody is making long-term investment, that is fine. But from short-term trading perspective, I feel it's already overheated, and there's a possibility that we may selectively see some stocks, performing well, but rest might spend further, at least a month or two in consolidation before any meaningful move. Energy sector, Mr. Sharat Patel have asked. So yes, so energy space, means OMCs and refiners. Trend is mixed, means Reliance is reeling under pressure. It's not obviously refiner alone, means we have so many things under one umbrella. But largely the index, energy index, Reliance is a major component. ONGC also now we are seeing profit taking. OMCs are somehow witnessing mixed trends. So there's no trend in OMC stocks, IOC, BPCL, Hill Metro. So for a time being, I feel that it's prudent to avoid this space until some clarity emerges. In case if somebody is looking for any trade like opportunities, keep an eye on OMCs, because in case if there will be recovery could be sharp. Banking, we have already discussed during the presentation. Thank you once again, Mr. Subramaniam, for your feedback. Okay, next we have stock specific queries. So there's several stock specific queries, sorry, which we cannot answer as it dilutes the entire presentation. And the idea is to talk about the generic trend that we are seeing, and based on that you can make your own judgment about the investments and the trading decisions. So yeah, with this we have covered all the queries, I guess. Yes, so thank you everyone for participating. Next week same time we'll connect again. Till then, take care. Thank you.